What's going on, you guys? Welcome back to another incredible video by Real FX. In this video I am going to be teaching you guys about inducement. Now if that sounds like something that you're interested in, stick around till the end of the video and don't forget to give this video a thumbs up, and don't forget to subscribe to the YouTube channel if you haven't subscribed, and click that notification bell icon so that YouTube can notify you when we post another video. Now before we continue, guys, I want to give you some good news. Since RealFX has been getting many requests about mentorship services, we have decided to create mentorship programs. So for now, this is what we offer at RealFX. We offer two kinds of mentorship programs. We offer the gold mentorship, which comes with the market breaker beginner strategy, and in this package you'll get a step-by-step guide throughout the mentorship. You'll get a weekly market breakdown, and on the platinum mentorship you will get the Real FX dynamite strategy, which will be taught in a very simple step-by-step guide. It also features a weekly market breakdown and a trading plan that anyone can follow. And in all these packages you get a trading psychology lessons, and our mentors will always be ready to answer your questions. And all these mentorship packages are valid in a period of 3 months. So this is it, guys. Join the mentorship and in 3 months you'll be the trading beast that you want to be. Now if you're interested in the mentorship, I will leave a link in description and you can click on it and it will take you to our admin and she will take it from there. Okay, so to show you guys how simple the concept of inducement is, I am going to go through this definition of inducement. This is straight off from Google. I'm going to go through this definition of inducement and then you're going to see how this applies into the market. So here it says inducement, it gives you the pronunciation. Let's skip that. Now it says inducement is a thing that pursues or leads someone to do something. Or here you can see that it's a bribe. You can also say it's a form of attraction and an encouragement or a temptation. Now, in conclusion, we can see that here inducement is when something happens in the market that leads you into believing that something is going to happen. So the market does something to bribe you or to tempt you into believing that a certain thing is going to happen. For example, let's say the market forms equal highs or equal lows, and by doing that it bribes you or it tempts you into believing that now that we are having a double bottom, we want to be selling from this point, or now that we are having a double high, an equal high, we want to be buying from this position. So that's the whole concept of inducement. I'm gonna go into examples of this, but I wanted you guys to know that inducement, there's nothing more complicated in inducement. It's just the idea that the market is doing something in order to induce you to believe that a certain thing is going to happen. So it's tempting you into taking a trade when you shouldn't be taking a trade. So here's what I'm gonna do. I'm gonna give you this simple drawing over here. As you can see, let's say we are in a downward trend. I'm gonna use a downward trend as an example today. Let's say we are in a downward trend like this, okay, and then something like this happens and then it pushes to the downside. So what is the market inducing you to do here? What is the market forcing you to do? So it's forcing you to believe that here we are having pay attention to this. So it's forcing you to believe that you are having high, a low, a high, a low, a high, and a low. So this is what the market is forcing you to believe, and then this is what it later does. So okay, it pushes to the upside, it takes out this high like this, and then after taking out this high, what is it forcing you to do? So at first it forced you to believe that from this area here we are going to be selling the market to the downside. Okay, from the last candle before the selling move, we are going to be selling the market to the downside. That is the first thing that the market was forcing you to believe. And then it takes out the very same high that you thought was a major high. So you thought this high was relevant, so it forces you to believe that now that we have taken out this high, we are looking to be buying from this position. So that's the second kind of temptation. So you are looking to what? To buy from this position and then push the market to the upside. However, that ends up not happening. So this is what happens. So the market takes out this high which you were focusing on, and then it pushes what? It pushes to the downside. So after pushing to the downside, and then that's when you start to be confused. You ask yourself what's happening in the market, and you start saying things like the market is manipulating you. So here, this is where the manipulation took place. This manipulation here, the market, by pushing to the upside and then breaking to the downside, it forced many people to validate this as a break of structure. So it forced many people to validate this as a break of structure, and immediately when they did that, it took out the high and then came back to take out the low. So this is what we call inducement. So the same thing is going to happen in an upward trend. The market will be forming higher highs, higher lows, higher highs, higher lows, and then there's gonna be a point where it forms this kind of a high and this kind of a low, and then it takes out the low and then it pushes to the upside. This is inducement, and inducement is a way of the market to generate liquidity. So the market creates what we call a break out of structure here, and then it creates a false break out of structure over here, and then it pushes to the downside. It taps into an important area right around this area, and it pushes to the upside. Now, the first way to avoid being part of inducement is to make sure that you do not take trades which are above 50% of the equilibrium of your range. For example, if we are looking at let me get rid of this here, and then okay, let me get rid of everything here. I want you guys to get this. I want you to understand this. Now, for example, if we are having this kind of a structure over here and then a push to the upside like this, now the first step to avoid trading the inducement is to make sure that you do not take any trade that is above your equilibrium. So any trade that is above this 50% over here, that's the first part. So you avoid taking any trade that is going to be part of this level over here. So any impulse that you get from this 50% here, we can consider it as inducement, and the market is going to have to push to the downside and then again push to the upside like that. That's the first part. And then the second part is that if we do not see any kind of liquidity before this move to the upside, then we can consider what? A reversal and then again a push. Okay, so if we do not see liquidity, this kind of liquidity being generated, before this push and then this push over here, we can then consider this to be inducement. Okay, so that's how you can avoid falling into traps of inducement. So that's the whole concept of inducement. Now I'm gonna go into a real chart quickly, and I'm gonna show you an example of inducement. Okay, now guys, let's look at inducement in real charts. This is the GBP USD on the 30 minutes time frame. So I am going to be taking you through what has been happening on the GBP USD and where we can find inducement. So this is where we're just going to start the chart over here. So let's look at this. This is a break out of structure over here. Okay, so after that breakout of structure, what do we have? We have this bit of retracement to the upside, then this push to the downside. So this is inducement. If you look at this retracement to the upside, no liquidity was generated on the way of this retracement, so the market just shot again to the downside, and then after shooting to the downside, it then created this move to the upside. Now it took out the high of that retracement, which might induce people to believe that now this is what, that this is a change of character that the market is now changing to the upside. However, we know that this is inducement and this is the high over here. Now we know for sure that this is just a way of the market to prolong the range. So the range moved from being this high and this low to being this high and this low over here. Now when it's like this serves as our inducement. We want to see the market take out this high, and then we start looking to sell the market to the downside. Where do we sell off from? You know how we do it here at Real FX. This here is our point of interest, so we sell off from this point right over here. So as you can see, that was a sniper entry into our point of interest. That's a QML level. If you don't know what the QML level, do check some of our videos that we have already created. And then now the market broke to the downside like this. The market gave us a break out of structure over here. So as you can see, the market then took out this part over here, again took out this over here, and then started shooting to the downside. Okay, so after taking out that high over there, it shot to the downside, and then it gave us what? A break out of structure. Where did it give us a break out of structure? Remember, it's a push and then it's a reversal and then a push, and then it gave us again a break out of structure here. So pay close attention to what I am going to say here. So that's a break out of structure. Okay, this here is a liquidity sweep, that's an inducement, and then again here there's a break out of structure. Okay, so that's a break out of structure. Let's try to understand. The same thing happens all the time. So you see a reversal, a push, inducement, a push to the downside. We take out the inducement and then we push to the downside. We break structure, we take out the inducement, we push to the downside, we break structure. Now let's zoom in here. What happened here? After breaking structure, there is a minor push to the upside over here, and then a push to the downside. Now this is where people are trapped. They call this a what? A break of structure, which is not, because after that we know that the market induces this high, it pushes to the upside, it takes it out, and then it gives us a clear break out of structure. So you see, that's how we know that the market is manipulating us. So that's how we know that the market is manipulating us. When liquidity is not being generated during the reversal, we know that it's likely a form of inducement. So a inducement and then a retracement to where? To this area over here, to this area over here. And then the market did what? It sold to the downside. The market sold to the downside. Now let's continue with the market and see what happened after that breakout of structure. Where is our breakout of structure? Here is our break of structure. Here is our break of structure. Okay, now let's look at what happened. Do you guys see that this here is almost an inducement, even though it didn't break structure to the downside? If you look at this, these are two equal highs, and if you zoom into the price, actually it did go lower than that, but it's the same thing. Two equal highs like this can induce people to believe that the market is now pushing to the upside. So where is that high that has to be taken? This is the high that has to be taken. Where is our significant point? Obviously, you know how we do it. It's either an order block or a QML. So we never have like thousands of points of interest to confuse ourselves. No, it's either an order block or a QML. That's how we trade at Real FX. That's how we do it on the mentorship. Many people have joined the mentorship, and they are saying that the mentorship is bringing change into their day trading. So if you want to join the mentorship, you can look for a link in description or in the comment section, and it will take you to our admin. Now let's continue with the market. As you can see here, there's a breakout of structure here. and then a reversal to the upside, and then a push to what? A push to the downside like this. As you can see here, we had a push to the upside, and then the market started pushing to the downside, and we did not have a kind of inducement here, but liquidity was generated in the setup. But I'm not gonna talk about that in this video, but liquidity was generated in this setup in the form of equal highs and equal lows. So that is another way to confirm, but let's just move on from that. As you can see here, we have this breakout of structure, but say we do not validate this as a break of structure because we did not see the inducement. This is the exciting part where you can continue with the market even if the last time it did not we didn't see some kind of inducement. As you can see here, we had a push to the downside, and then a reversal, and then again a push. Now here we have inducement, and we know that the market is going to try to take out what? It's going to try to take out that high over there, and then when it does that, it's going to come falling down, guys. So the market is going to come falling down. So as you can see here, we took out that by few pips, and then we saw the market push to the downside. So that is our inducement. So I think I'm gonna cut the video just here, guys. I think this is where I'm gonna have to cut the video. But as you can see here, we also have that inducement movement that is being done over here, so we can expect the market to retest somewhere around this area and then push to the downside. That is my anticipation. This is not a trading signal. I didn't invest a lot of time into analyzing this part, but this is what I would trade based only on inducement. I can already see that, okay, this here has to be some sort of inducement to the downside, and as you can see, we just tapped into that area. We would expect to see a change of character here, a reversal into this area, and then a push taking out this low over here. But that's it for this video, guys. Thank you for watching. I'm gonna see you guys in the next video.